Hey, it's Mike with PriceActionTradingSystem.com, and it's Thursday. It's April 22nd. This will be our chart lesson for the day. And this is Thursday, so it's going to wrap up our week. No chart lessons on Fridays. I did want to kind of give you an update on our second entry indicator. I have it on the chart here. It's counting on both sides. The greens are counting off the highs, and the reds are counting off the lows. And there's a couple of little small things that we can't seem to work out on them, and that's the reason we've delayed this thing. I've sent it back. There's a lot of reasons we delayed it. The original programmer we had a falling out with, so we picked somebody up new to take it over. And this is a difficult program to write, obviously. So, and there's some issues with engulfing bars. So basically, we've decided to ignore those and just basically add to the program that if you're looking at an engulfing bar, don't look at the count, don't worry about it. And other than that, it gets the good second entries. Occasionally it'll get off on an engulfing bar, and it will also occasionally get off a little bit in congestion in some rare occasions, but I actually like that fact because it keeps you out of bad trades and congestion. That's where a lot of people tend to struggle. So, and the idea is behind the second entry indicator is not to point out trades. So make sure you understand that this thing is not pointing out trades to take. It's just helping you learn the counts so you can find the second entries until you can do it on your own. At some point, you want to take this thing off and throw it away. But when you're new and learning, and if you're struggling with it, it's probably going to be helpful to you because it will point out the second entries, and it definitely points out the good second entries. It doesn't miss any of the good ones. So I think we really have it about as good as we're going to get it, and nobody else seems to be able to make one any better either. So I think we're close to having this released. There's a few little things we're going to tweak on it that are just to like back end clean up stuff, and then we're going to release this. We still don't know what we're going to charge for it yet, but it'll be under $50. We've got a lot of money in this thing, a lot of time, a lot of effort. So it's going to be, I mean, it's almost impossible just to give it away. There's some other guys involved in this, and they've spent quite a bit of time and money on programmers and so forth. And we've been through three different programmers at this point, but I think we've got it now. Except for the few little minor issues I discussed already, the engulfing bar, and when you're in tight congestion. And we'll have documentation that explains all of that and clarifies it for you so you know exactly what I'm talking about. But I just wanted to show it to you, put it on here and let you see it. It looks a little cluttered when you're zoomed out like that, but when you zoom in, you can clearly see it's not too bad. And it only shows the second entries. It doesn't count past that. But as you can see right here, we've got a new low. It shows at 0. It comes up. There's your first entry. When it breaks below right there, that's a first entry. It doesn't make a new low, so the count's still going. And so when it breaks lower the second time, which is actually right here, it's a second entry short. So when it broke lower right there, that's a second entry short. And then you can also see one off the high here. You got your 0 at the new high, first entry right there, so it puts the 1 right under the bar. And then when it breaks higher right here where that 2 is, that's a second entry long. So it's working great. Here's another low, first entry, second entry. Of course, that's in the uptrend, so while we're uptrending, we probably want to look at long. So here's your new high, first entry, second entry, and there's your 1 and your 2. And then you got a 0, first entry, second entry, and you got a 0, first entry, second entry right there. This is a great case of congestion right here. It counts this one, and just briefly, the reason when it doesn't count them is if it doesn't break lower here. The algorithm has a really difficult time if it doesn't break lower and then breaks higher. So if this was like an inside bar of here, it wouldn't count that as even though it made a lower high than here and broke higher. That's technically by our rules a second entry, But assuming that it didn't break lower right here, and it still broke higher on that lower high right there, that's still a second entry, but it wouldn't count it. But it wouldn't matter because we don't use inside bars, and we don't like entering in congestion like that anyway. So we've decided that that's not really a problem because it'll keep people out of bad trades because it won't show them a second entry on it. So if that's confusing to you, don't worry about it. There'll be documentation when we release this. So if you're interested in it, it'll be available on the website. And please don't send me an email asking me when. As soon as we have all the documentation together and have everything ready, we will post it. So you won't have to ask me. You'll know when it's ready. It'll be on the website, and I'll announce it. So please don't send me any emails or anything asking when it's coming out. It shouldn't be long now, another week or so, because we've gotten through all the difficult part of it. So it's just a matter of doing some back end stuff, getting the documentation together, setting it up for a download on the site and that type of thing. So, but it's coming. But anyway, I'm going to remove that real quickly just to clear up the chart, make it a little easier to see. And here's our trading day right here. Somebody showed me a nice little shortcut that I was missing, a way to zoom in and out a little easier, just to grab it down here and move it. And I've always used the control arrow, and that does work, but this is a nice feature that I was missing. As you can see, it zooms in and zooms out. And so thanks to Steve for sending me that little tip, because it's definitely a good one. So a lot of trades today, quite a few. We had a nice sell-off here. Early it looked like we were going to be in another tight range. And this is what they do. This is why you don't trade breakouts, because anything you read just about will teach you to go long up here. And that's the worst thing you can do. We teach you when you get a breakout of a range like that, it's going to fail. Even if it's going to go higher, it's going to fail most likely first. But this is the more common thing, is they'll run it out this side and they'll stack up all the longs. They'll trap out all the shorts, because the shorts that are trying to get short put their sell stops up here to exit, their safety stops. And all the people that don't know how to trade put all their buy stops up here thinking this is a good place to get long if it breaks out, because that's what most of your ideas teach you. And it fails, and then it rockets down, and that gives it momentum to go out the other side, and this thing never looks back. You get two clear legs down. Here's your first leg, and you can see that's basically almost a perfect measured leg down. So there's your down leg. That was our target, and we basically reversed on almost to the tick. It maybe went a tick or two further. So great measured leg. But first I would measure the range and look for a possible measured leg like that. And you can see that's what we got first. We came back, and when it tested the underside of this multiple times, and then it started the second leg down. And we made two legs down, corrected out of there, and then just kind of went sideways into the close. So that was it basically was a down day most of the day. Actually, this didn't start till noontime, but we had a downward bias almost the whole day, other than this move back to the top. We traded down here, and so from about 9 to 11, we did trend up. And maybe you could stay. If we got out of here, the bias might switch, but we still had a downward bias here. You can, when you're sideways like this, it doesn't really matter. You can trade it both ways, but generally you'll have a bias of the day. And it was down early, and then it was kind of switching to up, failed breakout, and then boom, off it went. The two measured legs down that I just showed you. So anyway, let's zoom back out here. Or zoom in, as I should say. Feels like we're going out, but we're technically zooming in. So clarify that, because I've had people get confused about me calling it zooming out when we're actually zooming in. So 7 o'clock came just as we're bottoming out right here, and somebody will probably inevitably ask me why this failed right here, bounce off support, but there's no rejection here. Look how we're just going sideways. Don't enter in this stuff. We're not getting rejection here. Uh, all they did was trap you in, trap you out, and then go right where you think it's going to go. So if you're not seeing rejection down here, which means prices come in and test it, hit it, and then turn up, usually you want to wait on a higher low or something like that. And you could argue that's a higher low, but look at all that congestion across there. So that makes that one a little difficult, especially when you've got that many bars stacked up. And that's coming from the overnight. There just wasn't much volume at all. But we do bounce out of there at some point, but there's just no way to get in that one. If you entered right there, actually that may be right before 7, so that wouldn't have mattered anyway. I tell people don't try to trade before 7. And so hopefully you listen to me and you wouldn't get caught there anyway. But you get 2 legs up and you get a little, notice we made that high. We tested it once, we tested it twice. So you get a double test. This one too is a little bit congestive. Not quite like this, but hopefully you can see the difference here. We actually got a little triple test right across there. I wouldn't count this as a test because there's no, even though we traded down and then back up, you want to see some space in there to count it. So, and a lot of times you got to be careful from one that's that many hours away. So really this is just a double top, triple top in a range, and there's 2 legs up, and this is technically a 3rd entry long, but there's 2 legs right here too, so it's a little tiny second entry. You can't really count that as a second entry because there's not a new low right there. So it's really a 1st entry, 2nd entry, 3rd entry. But there's enough reasons with that much room back to the EMA to be interested in that trade. I like it. And if you catch that trade, that may be the only one you need today because this thing trades straight down for however many points there. All the way down to 41.54, and your entry's up here at 41.64. So you get a 10-point move right there, right out of the gate early this morning, first trade. And you might have even gotten more than that, depending on how you would manage your trade. So, but then you get a quick second entry short right here. Notice the new low, first entry, second entry, a nice bearish bar. That's a nice trade, quick, easy trade. There's actually a second entry long. Technically it's not because that's not really a double top, but you could probably count that. It looks like 2 legs down, way away from the EMA. I don't recommend that trade though, just because we're still in this downtrend. Wait on a higher low or something a little better, and you get a higher low here, but the signal bar is not any good. You get a triple test here, again, signal bar is not very good. You bounce again here, but then you get this inside bar, which means that prices aren't really bouncing there. So wait on a higher low, but then it comes and it's way up here. You might take that trade if you've got enough room to get out. It's not a great setup. It is, you could look at it as 2. Notice the new low there. You try to go lower once, twice. But you got to be careful with these in a tight range like this because you just get chopped to pieces. We're not really looking for second entries or failures or any of that. But this is a second entry. Notice the new high, first entry, second entry, and it is a failed second entry short. So it wouldn't surprise me at all if they don't break higher and run to the high. So if you got room to get in there, maybe you take that trade. I'm not crazy about it. I'll mark it green. I think you're better off to stay out. And then of course the breakout fails and you're running down here. And again, you just don't get a chance to go short. You could use either one of these as your signal bar, but neither one of them are very good trade. This one doesn't qualify. This one probably closes in its lower third, but there's a lot of stem there. I think you need to wait on a lower high, which comes here, and then you got no more room. So we do break out of this, and look how far away we are from the EMA. This is just like up here at the high. I showed you, well, that's later on where we break out and it fails, and those are usually important highs or important lows on those failures, those failed breakouts like this right here. And being that far away from the EMA, you may take that trade. I don't have the little trend on here, but it's just coming down right through there, a little trend channel. You do get a break in new low, but you generally want to wait on a higher low here. I marked this one for you for the aggressives because it's. I'll be honest with you, I like to take these myself when I like them, and I like this one. But you can get stopped out on them. You just have to be careful. You have to take it knowing that it's not a high probability trade. However, if you catch it right, it's probably going to be one of your better trades of the day, and you're probably going to get a runner, and you might be able to get a huge runner. And you can see here, this just takes off. There's no easy to probably get a runner there. It's a little spiking channel, and that runs all the way up to 4160 or so. That's another 10-point move. So you got a chance for a 10-point move off the top and a chance for a 10-point move off the bottom. But we run back first entry, second entry. There's a second entry there, but you got no trend line really yet. I drew this off this lowest point here, not knowing, but this happens before that. So it's a second entry long. It's fairly tempting because you would expect prices might make a retest attempt of this high right here, but there's resistance across here, and if you extend this across, it is on top of it, but on the entry right here, it's real close. I mean, it does close up at the top of it, and actually this is probably just right there. So it does close above it. So I didn't mark it, but that's another one you could argue for. I'll make it at least green. It's good for, oops, it's the wrong green arrow. I think it's good for just enough to get a scalp on this first move. Actually, you wouldn't have got stopped out and it would have gone even higher. You could look at this as a higher low, but this is really your signal bar. The bar that makes the lowest point in your swing is the signal bar, or the highest point in the swing. You can't move over to this bar if you don't like this one. This is what sets everything. And you can see that you just don't get a signal. You can't enter on that one. You do get another higher low, and it's a failed second entry, but we're just going sideways there. I don't trust that to enter on a trap, because that looks more like congestion than a failed second entry short. Now, I did like it here as a failed second entry. Notice that that's a double bottom. So you can still count, you can start the count over if you want. First entry, second entry. And that looks more like a failed second entry short because it breaks lower and fails instantly and turns up and goes out the other side. I like entering that one on a trap because you've already had one trap and it didn't work out too well right here. Actually, you still would have got out of that trade, but when it gives you a second chance and gives you another trap, take it. And if you just wait up here, you get a second entry long, new high, first entry, pulls back. When it breaks higher right there, it's a second entry. Why did I mark this green? It is at a key entry point, but we're way away from the EMA, and we've got 2 legs up already. So, you know, there's some reasons to be concerned with that trade, and you can see right there we've already pretty much got a measured move. But you might take that trade still for the other reasons I talked about. And you can see we just went into this range. That trade would have still worked, but you would have had to ride this out probably. And then, of course, it breaks out. What does it do? It fails first. It comes back, and it does give you a couple of a second entry long here, but that signal bars doesn't qualify. There's a first entry here, but you're back in the range right at the highs. It could tick up here and turn down and give you a close outside on this trend or this trend line. So I don't like either one of those. And then it just runs up and goes sideways at the higher resistance from earlier. But we're moving along here. There's no entries really in here, none that I like. There's not room to get out on any of them. And then you get the failed breakout. And this actually ticks lower first and then turns and goes straight up and goes out that way, out the top. Sorry, my phone's ringing there. I got distracted. But it goes right out the top. So you could have a buy stop right there, looking to play this back into the range. You just have to have room to get out before here because it might not get back through there. You can see it looked like it was going to fail to push through before they gathered up a little more buying and it pushed on through. So the key is getting out before this high. And of course we have another failed breakout. And that's a fairly nice bearish bar, a little ways away from the EMA, but you want to be concerned about here because it may turn into support, and there's not a lot of room there, and that's an inside bar. It qualifies, the signal bar qualifies for an entry, but I just don't think it's a good location. You do get a lower high here, and I didn't mark that one, but it's another one. You've got a clear leg down correction, so there's a good chance you might get a second leg down, even if we're not going to fail here. Let me draw this, and you can see that there. So you may take that trade right there. I didn't mark it. It's a relatively bearish bar. It's one you could argue to be green. We only have one leg up there after this break of this trend channel. And that could be just because of the range and we're not going to be able to get outside it. And it did attempt a second leg up right there. And that is technically, notice it breaks higher. That's a first entry. And this makes a equal high, which is still considered a correction. And it did go lower. So that would be a second entry long too. But you don't want to go long right into that resistance. So you can treat it like a failed second entry long and a lower high and go short right there if you want. I just think it's a little bit, I've got some issues with it. I think you're better off to wait on the reversal, which comes right here. And it breaks higher, fails, and turns down. I don't think you want to wait and go short way down here. But when it went through that little matching 3-bar low, it's probably going to drop real quick. So that's where I would enter on. I would enter on this one on an engulfing bar. If you wait for it to break lower here, you got to drop a limit order further back here, and you'd only want it hang on and see if it would come back in, take you into the sweep you into the trade if it hadn't touched the lows yet. And I don't think it would have. It hadn't touched the lows, but I don't think you'd have got filled on a limit order at the regular spot, and you sure wouldn't have got a better entry. So. And then there's a second entry long, but you don't want to go long there. Even though there's two measured legs, you got a trend channel working down here, and you don't want to go long there. It's a nice move up, but there's just no way to enter that. And notice the little channel working up. You get a close outside, new high, and then you're working lower. But unfortunately, same thing. You don't get a chance to enter this one. That's your signal bar. It's a little congestive. You are away from the EMA. If this one would have broke higher first and turned down, yep, maybe you could enter. But I don't think you want to enter way down here either. And that doesn't really qualify as a signal bar because it didn't break higher. You get a lower high here, but again, that bar is just way too big. And there is a failure right here, but it's not back to the EMA. You've already got a couple of swings down. There's support across there. It's just not a good place. It's not a good reversal type setup. Yeah, the bottom drops out of it, but there's too big a chance it breaks lower and it comes back there. So it's just not a good setup. Got to skip it. Runs on down, and then this was the original support of the range, this blue line, and we find support there again. Again, you can't go long down here, really. It's a good ways away from the EMA and the trend line, and you could argue that there's a triple test there, but that's not rejection. And you see, even though it moved up enough to work, the better play is to wait on the short, because now you get a short right off of this trend line working down here, right off those first two swings, and you get a failed break out of this congestion. It comes down right off the EMA. There's a little 2-bar matching high that it breaks above first, and look how bearish. That's the place to go short. Just at this point, you're only looking that prices will at least come back to test the low of the range, but because of that one leg down, you may get another leg down, and off it goes. And you could have got a runner on this one, so you might have caught that one all the way down. We do drop down here. We finally bounce, come back up. There's actually a first entry, second entry, but again, not a very good signal bar. But you do get a lower high here, and just go short right there, and off it goes again. And it runs down to that measured. This was the measured leg on the range. And that would have been your target there as well, which you would have been looking for. So that was a nice little move down. And I did mark along here. Notice you made the low, try to go short once, twice. So there's a failure there. This is not a reversal type pattern, but this is a failure to the downside. Look at all that room back to the EMA, and you're way overdone here. Prices are overdue to come back. I like that trade just to trade a trap. That's a short trap. It's not a reversal pattern, but it's a short trap. And that was a quick, easy move. It comes back and gives you a higher low here, and you might enter this one. I didn't mark it, but it's another one that you could argue for it to be green, because by the time you try to go low that many times and haven't succeeded, the prices are going to go higher. And look how many times we've bounced off this low side. It's time for a correction, but you just got to be careful trying to pick bottoms. So the fact that it didn't take on off there makes you worry about this one a little bit. And you do have room back to the EMA, and you've bounced here multiple times. So, but I think you got to make that one green. I just think it's too risky, the fact that we didn't take on off here. So we work our way back up here. There's a second entry short right here, but we're not back to the trend line. Not a very good signal bar. It's just a doji. And it would have worked, but just sit tight on that one. It's not a very good setup. And you come back and you get a lower high, or basically double top, and a nice big bearish bar right off of the key entry point. Now, you may not have had this yet. I drew it off these lows and drug it up, and it fit. And you can see the midline fitting in there. So that's the best way to get that trend line. So, an average trader that's learning probably wouldn't have that. So you may not have gone short right there because it looks a little congestive and a little sideways. So if you don't have the trend line to give you a little extra incentive that we're probably, or a little extra information, I guess you should say, that we're probably going lower, then you probably don't want to take that trade. But you can see too how many times we've turned down up here. That's a double test. You made that high, you test it once, you test it twice. It's a big bearish bar. I like it because it broke higher first and then turned down and went out. It did go out the other side. You see it looked like it was going to trap people, but it turns on down. And this thing just rockets on down. There is a failed second entry long right there, but again, it's not a very good setup, especially when by the time this sets up, it's congestive looking, so it could easily break lower, come back and stop you out and then go down. So just stay out of that one. But if you come over here now, you bounce, you really have two legs up here. It looks a little congestive in the middle, but you get that failed breakout that turns and goes all the way through. And so if it breaks lower there, you're probably going on down. And that's a pretty strong move, and we're not down to the lows yet. And that's the first break of that channel. We just were overdue to come back to the EMA, and we couldn't get back there. That's the reason you got all that congestion there, is because they're just not, they can't muster enough buying to even get it back up to the EMA, and that's what prices want to do. They want to make another leg back. And so if you can understand why the congestion is there, and you feel that you're reading it properly and understanding it properly, then I don't have a problem taking that trade. But if you got congestion like that and you don't really know why, that's a whole different story. But this one, you got to figure that prices are overdue to come back to the EMA, and they're trying to get back. So that's telling you something. We can't even get up enough buying to get back to the EMA, and then finally they give up and boom. And it probably going to make another leg down. Measure that leg, look for a measure. And there it is, right there in the same target area. When you start to get multiple measured legs, targets in the same place, pay attention to it. There's another second entry short right here. We worked on down. You can't enter anymore in here. There's nothing I like in here until here you get a second entry. But that signal bar is just not good enough. It's very tempting, and it probably is going to go lower anyway, back down to make a new low. But I don't think you want to risk it because you're breaking the rules of the signal bar entry, and you'll get burned if you do that. So if you had a better signal bar there, take it, but I don't think you can take that one. Of course, we work on down, we meet our measured move. There's a high or low here, but that's not rejection again. Look how everything's under the EMA and you're just kind of bouncing around. So you got to wait for more proof that we're going higher. And we do get a second entry here, but again, the signal bar doesn't qualify. Look at that high, first entry, and then when it breaks higher there, but this is your signal bar. It made the lowest point. But that's a double bottom, so first entry, second entry, and then there's also a first entry, second entry. So I like going long there because you got to figure we're at least coming back to here now. And that does confirm that trend line. It's a little sideways, but that's not technically congestion because you don't have the little tiny body bar in there. It's just prices are just working back and they can't close underneath this trend line. And that's a quick, easy move. I did mark that one green though, just because it is a little sideways. So that's the reason that one's not blue. But I still like that entry. And this has been a big downtrend too. So that's another reason to be really careful trying to get long in here. And that pretty much did it for the day. You don't want to get up here. You can't get long into this trend line. It does give you a break, but that's too congestive. Now you might have traded a failed breakout on that second entry short right there. I don't think you can enter on this one because you don't have enough room back. And I didn't mark this one, but I like that trade. I'll make it green. It's a little bit congestive, but again, the reason there's congestion is prices are coming back here and the momentum to the buying. There's still a few people that don't know any better trying to buy in here, and they just don't know any better. But you can see the sellers are starting to overtake, and then boom. And it's not long before you run out of buyers and the bottom falls out again. So, but I like that one. There's a lower high here that would be even better, and it does break higher and turn down. But you're so close to those lows, and you see what happens. It probably, if you enter below that one, it's going to fail on you. You might have gotten out if you let it break lower and drop a limit order back near the high of this range. And if you did that, and I'd probably be okay with it. But I just think you're better off this late in the day, almost 2 o'clock. That's just not a real good trade. So. And that got us into 2 o'clock. So this is over 30 minutes. This is a long chart lesson. A lot to talk about. Of course, I spent 5 or 6 minutes talking about the second entry indicator. So I'm not going to beat around the bush here. I'm going to wrap this one up. We're going to wrap up our week. I'll come in tomorrow, trade for a little bit, do my put the mid-morning chart up, and then I'll probably take off early and start my weekend. I'm trying to do that on Fridays to get a break and get away. If you send me emails or anything and I don't answer on Fridays or the weekends, unless it's something really important or I just got some time, the weather's bad, you probably won't hear from me till Monday. So I just got to have a break occasionally, and I appreciate your understanding in that. But anyway, hope you had a good trading week. Hope you had a good trading day. Enjoy your weekend. We'll be back again to do it Monday. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.